Hello world, this is HL Quist. It's been a while since I spoke to you, and I thought I better bring you up to date. Hope you're ready for some good news. Amidst all this gloom and doom and unemployment rising and everything else, there is good news. I want to first refer to the third quarter numbers that came out for the fiscal year or the calendar year ending September 30th. I won't go into a lot of them, but I'll just give you the highlights. The gross domestic product, that's all the goods and services that the country produces, and that was up 3.5% for the third quarter. I don't know of a single economist in this country, including the 50 at the Blue Chip Economic Economist newsletter, forecast that there would be this great a turnaround in the economy this year. But I did. So I was on top of that, and I look for a strong fourth quarter. The other thing is the ISM. That's the Institute of Supply Management. They have an index which is called the Index of Leading Economic Indicators. And that is a broad-based estimate and the compilation of data from manufacturing all through the industry, which is probably one of the best indicators. That was up sharply in October, up over 3 points. It had just been increasing gradually, just fractionally for the last 5 months, and took a big leap. So that forecasts well for people hiring and so forth, and companies hiring going forward. Also, the University of Michigan's consumer sentiment. You recall in the past we've talked about how low it was in February, only 56 on their index. That is now 73. It leveled out a little bit in October, but I expect consumer sentiment to change. And what's happening is that fear is dissipating. People are feeling better. Obviously, unemployment is still high, and that'll take a while to correct itself. But what I want to do is point out to you several forecasts that I made in my book, How to Profit from the Coming Inflationary Boom, because what's happening? The inflationary boom has begun. That's the whole purpose of this announcement to you today. And in my book, which I finished writing in about May of this year, I forecast that Ford would be the leader in this rebound in auto sales. Of course, cash for clunkers led it, but Ford made a profit of $1 billion in the third quarter this year. Nobody forecast that, but I said Ford would lead the way and they would grab more market share, and that's exactly what's happened. On earlier forecasts, I said that the stock market would rebound sharply. People thought I was nuts, and I went fully invested on April 1st. It happens to be my birthday, but I thought that the time was right, and look what's happened. All this liquidity that's been infused into the market has resulted in a 57% gain in the Dow Jones Industrial Average from 65 now to over 10,000. I hope that you enjoyed that gain. We're still in a bull market stage of a secular bear market, but I expect that to change also. Also, we've seen the surge in commodities, and that is a strong precursor of inflation. Look at gold. Last November it was $700 an ounce, and it's now $1,100. I hope that you enjoyed that appreciation as I did. We've seen a dramatic decline in the U.S. dollar, which is the gold and oil and other commodities are priced in dollars. I also recommended in my book, along with the gold, that people divest money out of the U.S. dollar into currencies like the Norwegian krone and the Aussie dollar and open up an account with EverBank Online. Those gains have been over 20% in a money market fund this year as a play on the U.S. dollar. And also we're seeing right now, a surge in commodity prices. Rice is in short supply and prices have doubled. Sugar is at almost reaching a high, I don't know how many years. And as I pointed out in my book, is that you can't take all these millions and millions of acres of farmland out of production in California in the San Joaquin Valley and not have food prices rise sharply. Starting at the end of this year and into spring, we are going to see very sharp rises in food prices. Get ready for it. And that could be the trigger for an inflationary boom. Because remember what I'm saying all the time is in the early stages of an inflationary boom, inflation can be your friend and you can profit from it. That's what my book's all about. I show you where to put your money and where you can make a profit. But my biggest and boldest forecast for the year was in March 9th, I made a forecast for a retail boom. Guess what's happening? Despite all the forecasts and the gloom and doom and the consumer's not going to spend any money, it's changing. And as a matter of fact, I said in my book there'd be a shortage of toys. There's a pent-up demand. You know, last Christmas was a disaster, but people have saved money. We've got the strongest savings rate amongst personal savings than in 15 years. And here's the shocker. It's estimated that Americans have saved $300 billion in cash over the $150 billion they had in savings last year at the same time. Some of that money is going to be spent. And we've got part of the stimulus package. We got money flowing to lower income people that are going to spend it on Christmas. So, where are the shortages of toys? You can't buy a Zuzu, or what do they call it, a Zuzu pet hamster and all of the habitat and all the little things that go with it. People are trying to buy this toy and they can't find it in supplies. They don't know if China's going to be able to get enough product to them before the Christmas rush. Also, Mattel has the Mindflex toy that's in short supply, and Barbie's fashionista that wiggles her hips. This is going to be a dandy, and there's a shortage of them too. All this says that last year the stores were oversupplied with goods. Now they're undersupplied. Demand is going to exceed supply, and you know what happens then. It's a basic formula. But what's happening here too is that so many stores have closed. Major retail chains, mom and pops all over the country. Inventories are low, and the demand increases beyond expectations, and what happens? A shortage of goods. And so this is the beginning of an inflationary boom, and retail could be the trigger. And certainly food prices will be the trigger. But what I'm saying here is that make inflation your friend, and you can realize a substantial return on your investments if you invest in the early stage, real estate, commodities, and gold, and of course the stock market and other and the REITs and so forth. It's covered all in my book. But what I want you to do is contact me, because I want to get you on my blog. It's a long address, but the best way to do that is contact me at hlquist, Quist, at cox.net. And I will reply to you personally and get you additional information. And I've got several announcements coming out that I think are critical. And I'm going to offer a new newsletter on the 1st of January, and you'll get a notice on that too. Thank you, and I look forward to talking to you again. This is H.L. Quist signing off. Goodbye.